To what we just got from AMAT, but in the broader sense of what it portends for what we may hear in earnings season.
Yeah, so just like Josh said, I completely agree. I really care about earnings season and specifically forward-looking guidance. So I think that's a really good insight into demand destruction and what the Fed is doing. So I care what companies are saying. Tech has told us that they have had layoffs. We expect layoffs there first because it's easier, because they're going to lay off innovation and things of that nature, less things to automate. So I'm curious how that fits into the puzzle. Is there demand destruction? We heard early negative pre-announcements, so that pricing is happening early and often. So I'm really focusing on forward-looking guidance, and AMAT, Pepsi, all of the earnings we've already received are really verifying that process and thought process as we see the market react.
Yeah, Deepak, I mean, it's kind of hard to surprise us, right? At this point, right? The market feels like it's priced a lot in, and maybe you got a little bit of that today with a hot PPI. Market didn't, fall out of bed. AMAT drops the hammer on its outlook. Stock's not, cratering as we speak. Now, we said we'll take this with a grain of salt because we need to see what the follow-through is once you have an actual trading day around what's going on with the guidance there. But how about that thought, right? It's kind of hard to surprise us at this moment.
That's true, Scott. I think the bar is so low in terms of some of the earnings that, we are sort of immune to it, that numbers come down from the beginning of the quarter to the actual number. But nothing earth-shattering happens. I think others have said it, and I'll say it again. For me, it's, yes, about guidance, but I'm also looking for 3 or 4 other points. One would be on the inventory buildup. The second one, dollar strength, what companies are doing. Are they hedging? How it's impacting their translation revenues. Third would be worker shortage. Are they still having the same kind of labor shortage issues that they were having in the last earnings season? And then supply chains. Are there any improvements in the supply chain? So yes, the number itself is not necessarily, is going to drive the markets, but some sort of guidance on these 4 things might give investors some comfort level in terms of which direction we're heading.
Josh, since we're talking about AMAT and it gets us into the area of technology, I'm thinking about what we're going to hear from some of these companies, specifically the mega cap names. And I'm going to pull up Microsoft as we're having this conversation because it just makes me feel like, okay, this stock has hit a 52-week low. We've been talking about that every day. So it's already come down a lot. Why? The obvious issues, global macro issues. FX is going to be a big story. What are they possibly going to tell you in their earnings report in a few weeks' time that's going to drag the stock even further down because it's already de-risked and it's re-rated?
Yeah, and believe it or not, this stock actually has done worse than the S&P year to date by quite a bit. Look, I don't think that you look at a company like a Microsoft and you ask yourself rhetorically, what is this company going to say in terms of like they're trying to save the stock price? Or that's not, in a mega cap, S&P 100 mindset. They'll buy back stock if they don't see opportunities to do things more aggressively. A lot of these companies were being rewarded for blazing new paths and making acquisitions and getting into new businesses horizontally. And Wall Street cheered on the growth that came from that. That's not the environment that we're in right now. So there are companies like Microsoft, like Apple. They're more than comfortable just getting through the period that we're in, trying to do the best they can to hedge FX issues, et cetera. And they're happy to buy back stock. And that's what I think you're going to see a lot of going into the end of the year. I don't think anybody's empire building right now. So, I wouldn't listen to that call hoping for anything terribly exciting.
We just showed you a wall of the companies that have warned thus far. It's a smattering. I mean, it's not that many. And you have to wonder if you're going to need 2 walls of ours by the end of earnings season to get everything on that board. And we'll have to see, because there really aren't that many to this point. But with earnings season about to get, as I said, hot and heavy, that's likely to change. Jessica, last word to you, since let's finish it up on tech. You like Salesforce, okay? Higher valuation, a stock that's come down a lot. Maybe it's tough for some to get their arms around buying it right here, right now.
Yeah, it's a longer term view. So even thinking about what happened with AMAT, right? That is a result of fiscal policy. So I'm thinking of longer term views, what happens in bear markets and when there's big supply and demand disruptions and imbalance like there is in the labor market. That's that theme of automating systems and processes. If you cannot fill jobs, if we hear from the earnings announcements and so on that they still cannot fill those jobs, the only way that they can do that and really bring down or increase unemployment, but bring down that labor demand is by automation. So therefore, an investment in that is just logical.
Guys, we'll leave it there.